right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Monday, February 27th, 2023. Mind you, tomorrow is the last day of the month. That'll be Tuesday, the 28th. February is a short month. So just keep that in mind. We're one day out from the last day of the month, almost into March, and that's the last month of the quarter. So time is flying, especially when you're having fun. Dow futures up 250 points. NASDAQ futures up 144 points this morning, 1.2%. S&P 500 futures 4011 up about 1% this morning. 1911 for Russell futures up 1% as well. Crude oil is down about 0.5%, 75.95. I actually did a note on crude oil and energy companies on our last podcast. So you could search for that on the G.A.R Capital podcast. I did that with Nick on Friday. I sent the link over to our Discord channel. They seem to enjoy it. But again, if you are interested in the podcast, it is free. So you can take a look at that. Just go look up on Spotify, Apple Podcasts, and the Anchor app. That's GAR, G-A-R Capital Podcast. I did talk about crude oil and how I expect it might go a little lower, and kind of the future of oil companies in general, at least since we've had COVID. Gasoline futures up 0.31%, $2.59 a gallon. 10-year Treasury yields are falling this morning, 3.91%. That's going to help equities as well. The dollar's down 0.38%. That helps commodities other than oil and helps cryptocurrency. That's at 104.81. The VIX is at 21.33. That's down about 1.5% this morning. Let's go and take a look here at gold futures up 0.37%. Thank you, dollar. 18.23 an ounce. 20.84 for silver futures. That's down 0.46%. Copper looking to get above $4 again. $3.99, up 0.95%. Remember, we talked about copper and that correlation with SPX. Let's take a look here. Euro dollar is up 40 pips, 105.85. Dollar yen is down 42 pips, 136.08. And 120.20 for pound dollar. That's up about 80 pips. Speaking of crypto, 23,910. Looks like we're flirting with that 24,000 level. We need to get above 25,000 before anything starts really cooking. Up 2.38%. Ethereum futures 3.36% at 1674 each, at least at the contracts. All right, let's go ahead and take a look at S&P 500 futures. We are back up and rolling. Let's go and take a look at the daily quickly. And if you remember last week, it was a very, very heavy short week. We just played puts all last week. The only calls we had were Apple calls. That was from the week prior. I did a market recap on Friday. But again, you can see that we're kind of retesting that upward trend line that we drew here. We bounced off that downward trend line and the 200-day where it's kind of meeting right now. So let's see if we can get really to around 40.58. That's really the level I'm looking for some calls. If you're looking for maybe some short-term action, maybe 40.30. 40.30 does break. That'll give me an opportunity to take a look at some possible reversals, upward bounces on some stocks. We'll take a look at some stocks here this morning. 40.30.75, I put it say 40.31. If that breaks above, then I could possibly target 40.58. Use this trend line, if not the 50-day 4,000 as our support. Again, I can keep an eye on SPY. But again, let's take a look at Qs and see what we have here. Qs, we have an upward gap to fill right at 303.19. So again, in order for us to target that, we need to get above 300 or 296, excuse me. So let's place an alert at 296. That was the previous resistance that we had. Remember that 1, 2 right there? Actually, let me turn on the chat here. Okay, good. Good morning, everybody. Sorry, I had live chat. It didn't show up there. So 296.80 again. Remember 1, 2. That's our resistance. Resistance becomes prior support. We broke below that. Let's see if we can retake that resistance. If that does, then I would be targeting the 303 gap fill on QQQ. Let's see if we get there this week. But if we don't, then we'll just let our alerts do the work for us. Let's bring up SPY. Oops. I saw a question on SPY this morning. Yes, those SPY puts that we had, Zoom Balloon, they printed on Friday. Well done. If we didn't have that little bit of a bounce towards the tail end of Thursday, we would have probably gotten bags. Hell, if we would have bought those puts at 3:59 p.m., we would have made like 228%. What can you do? It's all about timing sometimes, but we got out of those. So well done to the team on that. We caught that. It was 4 for 4 for the week, at 3 for 3 for the week, just all on puts. Wasn't the easiest, but we did pretty well. So well done, team. In terms of SPY, not a lot of, we talked about ES, obviously that gives us a little more control. 398.40, I'm going to place an alert. If we break above that, I'll keep an eye on that 400 level. Again, I would not trade that alert. Again, I'm just going to keep an eye on it. Maybe take a look at 404, 405 level, but I would need to see some continuation. I'd rather do QQQ rather than SPY, even though SPY does have a gap to fill really at the same level as QQQ, which is right here at 408.15. So again, we may get a little bit of options here in terms of this break above 398.40, but we need to get above there first. It seems that we already are. We're at 399.86, so let me take away that alert. So we are above there because we're going to get there anyways. So let's go ahead and see if we can break above Tuesday's hourly close highs, 401.88. If we can get there, we also have another gap to fill on the hourly chart, which is right here at 407.19. So again, on the day, it doesn't look that great, but at least on the hourly, if we get above 402, let me see if I can get above 402. There you go, 402.01. If we break above that, then I'll be targeting this trend, this gap fill around 407. That's about a $5 move. You can always do the 405s, doesn't have to be 407, but again, that may be the target that I'm looking for. You have another gap to fill from the daily at 408, so interesting that we may have some upward action. But again, in order for us to short, again, we could all reverse this, obviously. Here is the target that we're looking for. We're looking for that 200-day moving average break, which is around 393.07. If that does break, then we'll be looking at some puts. But until then, really, it looks like we're going to play some bounces here this week as March is seasonally stronger than the end of February. So we expect that trend line to at least hold, if not bounce above the 200-day. So again, it kind of gives us some upward momentum if we get it, if yields and the dollar continue to go down. Price to add on Amazon and Google, again, we are not there in order to invest yet. It's not an investable market unless your dollar cost averaging. Then it really doesn't matter what the price point you're getting because you'll average out a good price. But you're just not there yet on Amazon or Google. You're just not there on putting a position yet. 4,200 is what I'm looking for. If we can get above 4,200 S&P, that's a 20% bull market above the lows from October. That's kind of the level I'm looking for. Until then, this is a trader's market, Young Jay. Just focus on the trading side for now. There's some really great opportunities, especially with volatility. So again, I would put my focus on that rather than just kind of picking and choosing what stock I want to buy right now. Again, if you're doing it for an IRA, for example, you got all year. So let's see if we can get an actual confirmation of the move instead of just trying to catch a bottom. Just be a little easier to do. SPY levels to the upside, I think we just went over that, but I placed an alert here. Let's see here, zoom to the hourly chart. There we go. Again, 402, that would be my level to break, and if not, we could target the 407 level. So 402, I'm not going to go ahead and just place a trade right away. I want to see the volume. I want to see if the VIX is continuing to go down, if rates are going down or continue to go down, and the dollar as well. Maybe we start breaking some levels. Let's go and take a look at the macro side. We'll take a look at the dollar, and you can see nice reversal there. I placed a chart on Twitter this morning. 105.68, that needs to be the alert to the upside. If that breaks, we're going to get some more weakness in stocks. We'll probably test that 200-day moving average on ES. So again, that's exactly what I want to see. If we get a break to the upside, then we'll probably short. Again, the dollar needs to come back down. It is below 105. Maybe we'll test that 50-day at 103.40 this week. We'll see. But again, we're going to go ahead and watch the dollar extremely carefully. We'll take a look at the 10-year Treasury yields as well. 10-year Treasury yields did break above resistance. You are pretty much rejecting here at 39.93. Really, that 4% level is that really big kind of level that everyone's watching. Round number theory, exactly 4%. We went by the resistance here back in the September, and then we broke out. But again, that's going to be my level here. 39.94 should coincide with the dollar. If that does break, then again, we're going to go ahead and short if that's the case. Whatever the market comes with that, I'm ready to go. 402, yep. Carlos says, thoughts on Wilson saying that the bear market will begin in March. Again, he's definitely been sticking with that. He was right in 2021. He was wrong in 2018. He was wrong in 2019. So again, I love Mike Wilson. I love his analysis because he's always on Bloomberg and he's always on CNBC. He has the other side that I see. Again, the real difference that I see, what he's saying, is the fact that we still have that golden cross. We still have that golden cross, that 50 above that 200. At least on a technical basis, I think we're going to start rallying. So I'm going to go opposite side of Mr. Wilson here and expect us to continue higher as we get the seasonality to the upside. If you guys remember, we've been talking about that for a little bit. Let me see if I can get that preview again of the actual. Let me see if I can cancel here. Let me see if I can get that seasonality for you. Here we go. Remember that seasonality, guys? I expect this to work as well. Again, you can see that dip into February like we got. I expect an ignition higher in September. In the beginning of March, excuse me, mid-March we'll probably dip a little bit and we'll continue higher. Again, based on the seasonality. This could all change, but I'm going to go by that since that analog has been working for us in regards to trading. So does that mean that we're not going to fall a little bit? Of course we could fall a little bit, but I don't think we're going to break those October lows at all. I think that's done with. I've been saying that on record, and I think we continue higher due to the seasonality. We'll see if rates continue to come down, or the dollar can reverse itself too to kind of support this. But we got earnings out of the way. Now it's all about the Fed. We don't have NFP this week. It was supposed to be this week, but it's a short week in February. NFP will be next week. That'll be the same time the Fed is on a blackout period. May give us a chance to run up into FOMC, and maybe we'll slide down an FOMC right after the actual expectation, or the actual event. So again, kind of gets us right to here, right? FOMC kind of gets up to here where we get a little bit of a dip. So I expect this to run up into the beginning of the year. Again, as long as you hold above that 200-day, and then we'll kind of go sideways action for a little bit, and then we'll dip probably into FOMC based on the seasonality script. Now, again, things can change. This is why we watch the market and actually, trade and take a look at everything as we go. But that's kind of the process that I'm looking at. It's been working. That could change, but again, this is where you kind of want to keep an eye on your trading plan and what the expectation is moving forward. So obviously, I do take what Mike Wilson says seriously, because he could be right. He's been right before, but he's also been wrong before. So in this situation, I think he's wrong, at least in his assessment. I think that we continue to go higher. In order for us to continue to go higher, we need to get above 40.57, 40.50. You can see that support there. Let's say 40.60 gets us above there. Then we're kind of on the right side of continuation to the upside. So again, it is Monday. We got futures up this morning, so let's not get too excited. We're getting a little bit of a bounce, but today on a Monday, I'm not expecting too much. Let's go ahead and take a look at some stocks that I'm watching this morning. Let's take a look at NVIDIA. NVIDIA, you could see here, I have a level at 229.91 for a breakdown. Why do I say that? Because we do also have a gap to fill from the earnings. Now, again, that may not happen immediately. We did a video regarding gaps to fill. We're going to post it on Instagram today. I'm going to explain exactly how gaps work, what do gaps do, and different types of gaps and how they fill. So again, that's going to be coming in today. Take a look at Instagram. Turn on notifications on Instagram if you don't have them already. Again, some really good stuff on that video. So we'll make sure to post that. But NVIDIA, again, a break of 229.91. We could possibly target the 220 puts if we get some little more downside action. Let's take a look at Apple this morning. Of course, Apple is very, very important in the market. Largest company. Warren Buffett had his weekly annual shareholder meeting. I don't think he talked about anything in regards to Apple. But Apple, you're pretty much in no man's land as of right now. We did have a gap to fill, and we filled it. So let me go ahead and remove this here. So with that being said, we don't have any gaps to the downside. We're holding on to that 38.2 fib level. We filled that gap. I'm keeping an eye on that 20-day moving average. Again, that's our momentum indicator, at least on the daily. If we get above 150, that'll be a very compelling argument for continuation to the upside on Apple. Let's see here. Jeremy's asking about the podcast. Yeah, I did the podcast on Friday with Nick. We posted it on Discord channel. Not only that, but it is on Spotify, Apple Music, and Anchor app. So it's the GAR Capital podcast. Feel free to listen to it at your own leisure. We'll do another one this week. Should be fun. It's always a fun podcast to do it with Nick. When using fibs, where do you start? We start at the bottom again and work our way up. Again, it just really depends on the time frame you're looking for. So let's take a look at here, the weekly. You can see that bottom wick here on Apple, and then I just go all the way up to the highs on that chart. And that's where we have our Fibonacci levels. But this is based on the weekly chart. And again, Fibonacci does not put too much emphasis on it either. Again, it is important, but again, it's kind of like navigation on a car. You don't need it to get home, but it's nice to give you some routes to get home quicker, let's just say. We also have a gap to fill here on Boeing. Let's see if we fill it back to the upside. We're trading at 199.48. That top level will be 204.65. Not the best in terms of RR. So let's take a look at the 2-year daily, and you can see that we also have another gap to fill here at 190. If we can get back below 197.25 on Boeing, I would target puts to that gap fill, just like the one we had on Apple to 191. And again, in regards to gap fills, again, we know the big one, Netflix. Netflix had a big gap to fill, and we filled that. Took a while. Let's take a look at Meta. We have another gap to fill. Look at this from earnings, 153.54. Alert breaks down to 167.25. If that breaks down, I'm going to take a look here at the possible 155 puts. But we're a long ways from that because we're now at 170.196, testing 172. So this is why we didn't hold our puts overnight or over the weekend. We had puts for Tuesday expiry. We closed that on Friday. Well done, team. I even took the runners out of there just for the simple fact that we were bouncing off that trend line. So that trend line right here, right around 393.57 on SPY. So again, the look here, at least now, is an expectation of higher equity prices. Let's see if we break above 40.30. If we really cook, we'll probably get to 40.60. That might be the resistance here for now. If not, we could just chop around as we're in the end of the month and heading into the last month of the quarter. So again, it's all about keeping an eye on things. Let's see what the dollar does. Let's see what rates do. Let's see what the VIX does. The VIX has gaps to fill to the downside too, and we know that those things do fill. Let's go ahead and finish up here with the VIX volatility index. Any gaps to fill here that I see? Nothing on the daily, so at least that. Let's go take a look at the hourly. And you could see here, so you got one more here at 21.30. We'll see if we fill that. You got one here at 20.03. Let's see if we fill that. So that's a couple of gaps to the downside that we could possibly get today, if not during the week, if we get some continuation in stocks, as we know. But let's see if I can put these gaps here for you guys. There you go. You got two gaps right now on the volatility index, at least on the hourly chart. The low being right around, or right exactly at 20.01. Fabian asks, good morning, Carlos. Hey, so when I hear you talk about the markets, business as usual, but what do you think about a war with Russia? Do you think this could be a black swan event? Absolutely. I mean, even China invading Taiwan would be a black swan event. That's not something that anyone could prepare for. I mean, it's not like we have control over that. There's one thing about the end of the world is that it hasn't happened yet. If it does, then stocks are really the last thing on your mind if we have a world war. But even in World War II, Korean War, Vietnam, the stock market still went. So it's not like anything really pauses unless it turns into a nuclear war and then all of this is for naught. Then the market will absolutely tank because everyone's going to take cash out of the market, as the threat of military mobilization would be extremely real. I try not to, obviously you read about these things, but you try not to implement that into your trading plan. Let's say you were kind of hedging for the world war, nuclear war of anything. How terrible. Now you have counterparty risk. Let's say you had puts and they cashed. Who's going to cash them out for you? The market would probably be closed if there was a nuclear device going off. So very scary stuff. I try not to think about that stuff, obviously. But again, if it does, it does. But let's go ahead and just kind of work like everything's going to be okay and not the world be destroyed. A black swan event is something that you cannot prepare for. COVID, for example, is a black swan event where no one could prepare for that. It just happened. And even that, I remember in March and February of that year, God, everyone was terrified. The world's going to end. Oh my God, we're stuck at home and everyone's going to get sick. Everyone's going to die. And it took about a year and a half, about 2 years for everything to kind of get back to normal. America's and the world's pretty resilient. We don't like to just focus on bad things. People trying to just adjust accordingly with their lives. I don't think you can adjust accordingly with nuclear war, but obviously, with that being said, I don't even like to think about it. But I would say that if nuclear weapons did fly or a war with Russia was beginning, yeah, I think stock market would be the last thing in terms of prioritization on my mind. I'd be going to the grocery store and making sure I get stuff for the house, because for all we know, it could be some really craziness like martial law. Everyone's locked down in their homes. I mean, you don't even want to go through that rabbit hole of things. Let's see. Good morning. Can I ask what is the bottom of Palantir on earnings? Let's take a look at it. Palantir is a stock that I own as well. Let's go to the 2-year. We're now below the 200-day. We're above it now. We're above the 200-day, kind of hitting our head on it. There is a gap to fill here at 778. That's your lowest gap that you have. That looks to be possible support. Maybe we did fill it, maybe we didn't. No, we did not fill it. 786. So that could be the bottom, at least for now. There's not a lot of real edge here. You need to break this. You need to get above this gap fill here at 1088. That's the level you're looking for continued upside. But for now, as long as AI gets the buzz, Palantir will be okay, at least. But again, it is high beta, so we know the drill. Very, very volatile. So we'll keep an eye on it as we go. But I'm going to keep an eye on that gap fill at 1088. And if it does, then it gets really, really interesting. But there is a small gap to fill around the high 7 area, I think 781 or so. So just keep an eye on there, the oil. We'll go ahead and leave it there, guys. Have a great rest of your morning. Thank you so much for joining me. Make sure to hit that subscribe button, hit the like button if you like these videos. I will catch you guys tomorrow for the next morning note. Have a great rest of your trading day. Happy Monday.